Hey everyone, welcome back to our latest TDR Cannabis in 5 podcast presented by Dutchie. I am your host, Shad Dales. Hope everybody's having a great long weekend. This morning, I'm going to dive into one of the most practical topics in this industry right now. How to think about building a cannabis stock portfolio for 2025. Why does this matter? Well, whether you're brand new to investing or you've been trading for years, everyone wants a roadmap. Beginners are looking for guidance while seasoned investors want strategies and names to keep an eye on. But before we get rolling, I want to be clear, this is not financial advice. Everything we're talking about today is for educational and entertainment purposes only. Most important thing is always consult a licensed and registered financial advisor before making any investment decisions. All right, so now that we got this out of the way, let's get into it, because if we are headed for another cannabis bull run, being positioned early could make all the difference. So we welcome you into the latest TDR Cannabis in 5 presented by Dutchie. All right, first begin. Here's the hook. If cannabis is rescheduled under President Trump, or if Pennsylvania and Virginia flip to adult use legalization before the end of the year, we could see billions of dollars in value unlocked almost overnight. So the real question is, how do you build a cannabis portfolio for 2025 that gives you exposure, balance, and a potential upside without overloading risk? So that's what we're here to unpack today. The top picks, the pitfalls to avoid, and the strategies investors are talking about right now. But again, this is not financial advice. Always talk to a registered financial advisor before making any moves. So let's really first start where we stand right now. 2025 has already been a wild year for cannabis stocks. Rumors of rescheduling lit up the MSOS ETF earlier this year, and individual names like Tilray, Curaleaf, Trulieve, they've all had sharp moves up and down. Then you add in politics like Pennsylvania and Virginia. Both could announce adult use legalization before year's end, and you've got a sector that feels like it's sitting on a powder keg. So yes, volatility is part of the story, but so is opportunity, and the best way to manage both is through a structured approach to your portfolio, which brings us to the foundation. What goes into the core of a cannabis portfolio? With that, when you're thinking about cannabis investing, it helps to break it down in 3 buckets. As I said, number 1, the core holdings, the strongest, most established companies with scale and balance sheets. Number 2 are growth plays, operators expanding in key states or internationally. Then there's 3, the speculative bets, smaller names or turnaround stories with higher risk but bigger upside. Balancing those 3 buckets could keep you diversified. Now let's look at the first bucket, which is the core holdings. These are the companies that give your portfolio stability. The first company we look at is Curaleaf, one of the largest MSOs with international exposure. There's also Trulieve, the giant in Florida with potential upside if the state flips to adult use. Also making this list is Green Thumb Industries, one of the rare operators consistently turning profit. There's also the big name in Tilray, a global play with exposure to cannabis, beverages, and wellness. Keep your eye on Village Farms as well, a greenhouse veteran with proven Canadian operations and international credibility. These names are often considered the anchors of a cannabis portfolio. At least they are right now. Once you've got those anchors in place, the next step is to look for growth opportunities. Companies that might not be the biggest today, but are expanding fast in the right markets. So let's talk about this growth bucket. First company that comes to mind is Verano Holdings. Strong positions in Illinois, New Jersey, and Florida with a premium product focus. There's also Dutchie Holdings, smaller but strategically placed in Pennsylvania and Virginia. If either flips to adult use, Dutchie could benefit in a big way. Then there's the Canadian company High Tide, Canada's retail leader, known for its loyalty program and now planting seeds in Germany. These are the names that may grow faster than the giants if the policy winds shift their way. But as we know, cannabis is a high-risk, high-reward industry, and that's where the third bucket comes into play, the speculative plays. Speculative stocks aren't for everyone, but a little exposure here can add extra upside. The first company that comes to mind, and it could actually fall into one of your core holdings, and that's Glass House Brands. It's California's largest cultivator, betting on scale and efficiency in a tough market. Also, Agrify, otherwise known as Rhythm now. It's a turnaround story pivoting into lifestyle brands and hemp-derived THC products. These names come with more risk, but also the potential for bigger gains if they execute. And Glass House, as we know, continues to execute. And for those of you who don't want to pick individual stocks at all, there's always another option, which is the ETF route. One ticker many investors use is the MSOS ETF, which trades on the New York Stock Exchange under the ticker symbol MSOS. This ETF holds many of the operators we've talked about: Curaleaf, Trulieve, GTII, Verano, Village Farms, and more. It gives you diversification across the sector, professional management, and rebalancing. Also simplicity, broad cannabis exposure in one trade. So investors who don't want to choose between one stock or the other, or want less concentration, MSOS can be a helpful tool. But once again, I remind you, this is not financial advice. Always speak with a licensed advisor before investing in anything. Finally, no conversation about building a portfolio is complete without talking about the pitfalls to avoid. These are important too, because as we know, the cannabis industry is very volatile. Here are some common traps cannabis investors fall into. One comes to mind is overconcentration, putting too much money into one stock or one market. Also ignoring financials. Some operators still burn through cash. Always check the balance sheet. Then the other thing that we know is that this industry moves on announcements, so be careful on chasing hype. Remember Canada back in 2018? Huge rallies, they fall by big crashes. Also, another thing is forgetting the timeline. Cannabis reform, it takes longer than what most people think, and we're experiencing that right now. So avoiding these mistakes is just as important as picking the right stocks. So how do you put this all together in a balanced portfolio? One possible framework could look like this: 50% in core holdings, Curaleaf, Trulieve, GTI, Tilray, Village Farms, Glasshouse brands. Then you have your growth plans, which is Verano, Jushi, or High Tide. Then you've got your speculative bets like Rhythm. Or if you prefer simplicity, consider just holding the MSOS ETF for broad exposure. The key here, everyone, is knowing your balance and your risk tolerance. Everyone's different, everyone has their own strategy, but again, not financial advice. Make sure to contact a registered financial broker at any time when doing an investment decision. Now let's talk about probably the most important thing right now, and that's timing, because in cannabis, timing can make all the difference. And really, that's the case for most investments. But timing matters more so in this industry versus a lot of others. Why do I say that? Well, think about it. If rescheduling happens federally, expect a sharp rally. If Pennsylvania or Virginia flip to adult use this year, that's another catalyst. And globally, if Germany continues to expand and Colombia speeds up legalization, look for companies that have a footprint in those countries. So the message is position thoughtfully, be patient, and be ready to adjust. And one last thing, like I've said a number of times here, this is not financial advice. Always talk to a financial advisor before making an investment decision. And before we wrap up here today, a big shout out to Dutchie. Dutchie powers cannabis commerce from everything from online ordering to payments and inventory tools. They're helping dispensaries, brands scale smarter, serve customers better, and grow faster. So like I've said a number of times recently, whether you're building a cannabis business or building a cannabis portfolio, Dutchie is here to help you grow. If you want to learn more, visit business.dutchie.com. That's a wrap here today. Let us know in the comments below, what companies do you like and why? Love to get your feedback, so let's keep this conversation going. As usual, if you like this breakdown, make sure to give it a like, smash on that bell for all notifications, and share it with your network. And greatly appreciate it if you could subscribe to us here at TDR. All right, brand new week on the horizon. Here we go. And I know there's a lot of people following this space right now, so make sure you stay connected. That's it for our latest TDR Cannabis in 5 presented by Dutchie. I'm your host, Shad Dales, and I'll see you next time.